Today's video is going to be doom and gloom, guys. Bring your tissues. This is going to be brutal. I'm just talking about a market crash. I'm going to talk about why I believe the market is massively overvalued and an inevitable pullback is on the horizon. I am currently pulling out most of my money as it stands. Over the last 5 days, I have pulled out another sort of 20% of my money out, and I am currently now 1/3 invested, 2/3 sitting in cash reserves, waiting for the inevitable pullback.
Yeah. Coincidence. Yeah. Coincidence. Yeah. Coincidence. Something that happens by chance, I think not.
What's the crack, everyone? Welcome back to Buy Wholesale. I hope, of course, you're all well. First of all, I got a new little stand thingy for my camera setup, and I tell you what, I am absolutely delighted. It's so slick. I can push this little button now and do my recording and stop. It's the small things in life, guys. It really is. I bought myself a new mouse. This is all with my first pay packet from Google. A new mouse that'll slick and make my editing so much quicker, guys. You know I like to do a lot of serious editing. The average video time for me takes in and around sort of 6 hours from start to finish to produce. You don't even know the effort that goes in. It'd be so much easier just to mirror a computer screen and throw me in the corner talking for dribble for 10 minutes. But I try to do something different, so if you do appreciate it, hit the like button. Moving on, guys, on this channel, for the last sort of 4 or 5 months, on the majority of the videos, I would throw in about my fears of the uncertainty of the market. Now, over the period of the last sort of since really February, since that huge gaping in February, it's really made me understand the market, and I've spent a lot of time learning how to read the market, what to do in these instances, so that kind of gaping that I took in February will never happen again. Now, you can't time these things. I'm a big believer in that. So my strategy, as I've said, has been taking profits when I can, not being too overexposed, and making sure that the stocks that I want long term, I'm not Ian Beale. I do have money aside. I'm only sort of maybe 50% or so invested in them. So if there is a pullback, I can load up. At the end of the day, you don't want to miss any potential rises. So I believe you have to be in the market. But over the last 5 days, I've stripped out a lot more, guys. And as it stands, to be truly honest with you, I'm just under 1/3 invested, which is a hell of a lot of money sitting on the cash side. I don't like to talk about how much I do have invested in the market. I'm trying to make this channel for beginners and intermediates. I don't believe experts go on YouTube to get their reviews, so I try to aim this more directly towards beginners. So if you have £100 invested, if you have £100,000 invested, I believe this is the approach that I would be taking right now with this uncertainty. So depending on how you get your source of information, I try to get a wide range. I try to watch YouTubers just to have a general feel of what YouTube is craving. It's mostly penny stocks. It's mostly the next one to the moon, how to become a millionaire in an hour, things like that. That seems to be the hot stuff. I dabble in it. I've done a bit more previously. I try not to do them videos now because it's just, in my opinion, junk. It's just not great quality stuff. No one can predict the next hot stock. It's just a myth if anyone believes that. You can pick good stocks that will be great, but this whole buy a stock this month and it's going to go to the moon, you can't do it, can't predict anything. And that's the same with the crash. You can't predict the crash. There's a lot of YouTubers that have been talking about this crash for 8, 9, 10 months. And eventually they will be right, and then they'll go, I told you. But you could also turn around and go, well, guys, look at the amount of money that I've lost out on the last 10 months. So I believe in adjusting as I feel. I feel like we're bubbling. I feel like we're getting a bit crazy again. There's some crazy gains on certain stocks, and it's kind of making me step back and go, right, this is getting a bit crazy again. You'll have seen a lot of news reports reporting about the crash. We've talked about Powell in this here. We've talked about the tapering fears. We've talked about just in general the fears out there. We've seen pandemics. We've also seen terrorism affecting the stocks. There's a lot of different things that all play into this whole big crazy bubble. The market, housing market, again, being a previous estate agency, being a current quantity surveyor, I can see inflation is ripe, guys. I can't explain how bad inflation are. Generally speaking, every construction building that we're looking at the moment is in and around 10 to 15% higher than what it would have been a year ago. Tenders are a lot higher, and there is a lot of inflation. And with inflation sparks fears, and within fears sparks uncertainty. And as we know, the market does not like uncertainty. I have reduced my Tesla position by 50%. Several reasons. We had AI Day, which was a great event, and we've seen a lovely rise up from that. Got up to about 760, and I thought, you know what it is, I'm content with that price. Has the potential to continue on, but with the market sentiment, I'm more than happy stepping up and waiting for a month, 2 months, a week, who knows, but I'm prepared to wait this out now and day trade, swing trade, keep money in maybe for a day or two using the charts, stuff that we talked about in the channel, to try and play in and out. But I don't want any long-term positions any more than what I already have, and I will be considering taking more money out. And that's how I've been doing this, guys. As it goes, I've been adjusting it and suiting as it happens. And in a month's time, as the fears and risks are even higher than where they are now, I could potentially be reducing that to 0.25% in. All the news articles, all the reporting, everyone's talking about a crash now, guys. This is serious. It's on the tips of people's lips. Open your eyes, get more news resource in. It's not all just about pumping, dumping. I try to get a balanced report. I look at bears out there because you need to have that balance. And hopefully I'm bringing balance to you on this channel. For example, look at this news article. Warren Buffett's global market indicator hits a record 147%, signaling stocks are too expensive and could crash. Big Buffett, big balls, guys. You know the crack with Buffett. Like, I'm not even going to talk about Buffett, the king. Buffett has been there, tried and tested. He's been through many a recession, many a crash. He knows the situation. So for those that don't know, the Buffett indicator, a Buffett indicator is the ratio of total United States stock market valuation to GDP as of September the 2nd. So only a week ago, we calculated the Buffett indicator as this. 243%. So Buffett indicator is 55.8 trillion divided by 22.9 trillion. And our calculation is that it is currently 95% above the historical average, suggesting that the market is strongly overvalued. These are historical all-time highs. However, with interest rates at historic lows, there is reason to suspect that this time is different. And that brings me to my next point. These are unprecedented times. It is all being propped up. You think about scaffolding, for example. That's a nice, solid, sturdy piece of equipment. It's all linked in, it's all solid. And that's kind of how I see the stock market right now. Everything, you've got retail investors, you've got stimulus checks, you've got low interest rates, throbbing housing market. All of these things are just all tied in and propping up the stock market. But if any one of those things come out, the whole thing just goes. That's my concern, guys. But the historic trend line, once it goes above this, it usually pulls back. And you can see here, guys, anytime it goes above this here, it pulls back, it pulls back. Now look at this, guys. We've been on a bull run for about 11 years. It's incredible. 95% above the trend line, guys. And if you look at this one, for example, guys, so the Buffett indicator value versus the historical trend since 1950, and we can see how it's been going, and these are the different ranges: strongly undervalued, strongly overvalued, and everything in between. So you can see here, guys, what's been happening. So there's the trend line, but then we seen the dot-com bubble happen. Not that I was paying any attention to the stock market, or probably didn't really even know what it meant in 2000, but the stock market went gape. Massive big pullback, guys. Then we went it up, and then what happened just as we were recovering? 08 happened, and I did get to experience the 08 crash. That really was a good time. That really was a fun time. Gaped, knickers down again, guys, on this one, and then we've been riding it up, and we've been generally riding it up right up since. But look where we are now, guys. Come on now. Bear in mind, unprecedented times. Never seen like this in anyone's generation. It could be continuing to go on, but as soon as the Fed and Powell come out and goes, here, guys, tapering happening December. You ready? This is going to go down. There's plenty of things that are going to bring this down. So you've got to decide right now: are you in balls deep? Are you partly in? Are you all out? I would be definitely swinging towards protecting yourself and loading up, maybe 50-50. And I don't know. You make your decision on your situation. But for me, I am now 1/3 invested, and the rest out now. At any given time, I could potentially have all invested, because I'm doing a lot of swing trading, a lot of day trading. I'm enjoying that, but in and out, not keeping things over the weekends, not doing anything like that. Very much in control of my situation. Guys, look, that's the video. I just wanted to try and be honest with you, shine a bit of light. There's a lot more doom and gloom, and I do recommend everyone goes and Googles the life out of this. Do your own due diligence, understand the market is a sentiment. It's more than just your stocks. Look at the whole thing and be sure that you're comfortable, and prepared is the key thing as well. Fail to prepare, prepare to fail. Be prepared for a crash. What are you going to do? Are you going to just snap on the stocks? Have you got your stop losses set, guys? If there is a big pullback, are you protecting yourself? All of these things you just need to consider. If there's anything within this video you'd like me to elaborate on, we can talk about stop losses, we can talk about where you set them, we can talk about trend lines, we can talk about chart. Anything you want, guys, let me know in the comment section below. If you have found it informative, please hit like, please subscribe. And if you're also thinking you wouldn't mind maybe starting your journey, don't be fearful of it either by this video. Even start it with a free share up to £200. Click the link down below. All of that good stuff, guys. I'll catch you next week. That's the final video of the week. Woo! That was intense, guys. Peace.
Yeah. Coincidence. Yeah,
Coincidence.
yeah.
Coincidence.
Something that happens by chance, I think not.